Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Overnight, renewed demand for the US dollar or the USDXY triggered a reversal right across the board as the bullishness has now turned into a somewhat bearishness, and with the market now sending the Australian dollar lower and challenging the area around 65.40-45. It is viewed that the rejection from that top side was also seen around the 60-day moving average. In view of the current pattern here, I do anticipate the market could actually respond to a rejection and find the market retesting the top side. So therefore, we should not dismiss further upside challenges around that 60-day moving average and eventually see a clearance on towards 67 cents. With the dollar index surging, the market is now back around 103.90-95. This has sent the euro lower and now pressure in the support area around 108.35. I feel the market may actually see a little bit more to the downside, but we're getting very close towards that support area seen around 107.70-80. And I'm not going to get negative around this bottom side in case we see a rejection, because overall nothing hasn't really changed in terms of the fact that there is a potential rate cut coming in June. And no doubt the dollar will be weaker and therefore recover in terms of the euro and most of the other currencies since this sudden sell-off. The challenge back to the top side for dollar yen, finding resistance again at 151.80, and so far has been respected. The market should be a little bit cautious as this is an area much talked about where the Bank of Japan may have intervened and therefore could see high volatility and send the market lower. In the broader sense, I feel the market may actually reject again and look back towards the key level of 149.30-35 and reassess from there. As widely expected, the Bank of England kept rates on hold, but nevertheless the bearishness came in very heavily and now sending the market all the way back towards the support level seen around 126.20. I feel there is good support here like previous on that bull run, and the market may again recover from this region and look back towards 127 to 128. A very whipsaw price action for gold and close to a spinning top as the market found heavy supply above 2,200. And with the current weakness coming into play now, could see a further tumble. That is towards the region of 2,170 or maybe lower, with a base holding around 2,140. I still like to point out traders should exercise caution due to the expected high volatility, as this pattern, the spinning top, suggests further weakness and possibly a reversal in this recent bull trend. But the market should find support, as I mentioned, around 2,140 and reassess. Since the topside objective of $83 has been reached, we're seeing a bit of a sell-off as profit taking comes into play. Given the current pattern, I'm still maintaining a neutral stance and like to see a little bit more in terms of confirmation when it comes to trading next in putting a position or any call, and at present is still a little bit clouded. But overall, keep an eye on these signals in case opportunity arises. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoyed a great start to the new weekend.